And now with the latest business and market news, it's over to Jayne Edwards.
Thanks, Alan. Wall Street closed its shortened working week with another day of gains. The Dow and S&P 500 added 0.5%, but tech stocks were limited by some disappointing outlooks in the sector. It capped off a week in which investors became more confident that the US will avoid a double-dip recession. Data on initial jobless claims and US trade were better than expected, and strong Chinese import figures on Friday gave the market a boost. But the big picture is still pretty dull. Both the OECD and IMF warned in separate reports this week about an anemic recovery in the advanced economies, with both predicting a slowing of growth in the current half and into next year. Elsewhere, the oil price jumped by 4%, and that also gave a leg up to energy stocks. Across the week, the US market was broadly unchanged, while the other major markets each added 1%. For more on Australian shares, here's Tom Elliott.
Well, as you just heard, the overall market managed to rise over the week, although, as is often the case, the trend was not uniform amongst all stocks. Now, earlier in the program, we saw that the ACCC for the second time has knocked back NAB's bid for AXA. This was good for NAB shareholders who saw their share price rise over the week, but of course AXA shareholders suffered the reverse fate. Their shares sold off heavily. Everybody's wondering now, what will AMP do? They already have regulatory approval should they wish to make a bid. We'll see what happens. Foster shares were very strong after the company knocked back a $2.3 to $2.7 billion private equity bid for the company's wine division. This proves that wine can be sold, or at least a wine division can, and the question on everybody's lips is, will someone soon make a bid for the entire company? Macquarie Bank showed that bad news often comes in threes, with its third profit downgrade for the year. Who knows when Macquarie Bank's share price will pull out of the tailspin that it's been in recently, but they will have to show that they can make money in the way that they used to. Insurance stocks were pretty strong over the week. We saw the prices of QBE, Insurance Australia Group and Suncorp all rise, which some people might think is surprising, given that we had the Christchurch earthquake and, of course, the floods in Victoria just days ago. Of course, what these natural disasters reveal to everybody is just why you need insurance in the first place. And in the gold sector, just a lot more corporate activity happening there. Now, Andean shareholders were perhaps disappointed to see that the bidding war that looks like it might have developed for that company has faded away. Eldorado Gold, one of its potential suitors, has decided to pull out of the race, and the shares fell slightly during the week. And Avoca Resources saw a big fall in its share price, even though it agreed to a nil premium merger with North American producer Anatolia Resources. Winner of the week is Sundance Resources, up 29% after announcing a rail deal with China Africa Construction. Loser of the week, however, is Santos, down 12% after selling a minority interest in its Gladstone LNG project for considerably less than expected.